This is a special podcast presentation from 700WLW.com. This is Casey Boland On Demand.
700 WLW. And Money Talk here with Casey Boland. First of all, the health savings account is a good thing to have, but very often you're new to the workforce, don't have a lot of money coming in, and it's difficult to just put cash straight into an HSA, correct?
It can certainly be. I mean, you have to make contributions to a health savings account to be able to use those dollars. You have to have a high deductible health plan to be eligible. But the benefit of contributing is that you receive a tax deduction for making a contribution, and the money in that account can grow and can be withdrawn tax-free in the future if it's used to pay for qualified health expenses.
You know, it's tough to go with enough cash out of pocket. There is a rollover you can make. Explain how that would work.
So if it's a challenge in putting away the money into the health savings account or HSA, you can make a tax-free rollover from your IRA to a health savings account. You can do this once in your lifetime. It's got big benefits. You don't have to come up with the cash out of pocket. You have to have an IRA account where you can make the tax-free rollover from. But as an individual, you can put $3,350 in, or if it's a family, you can put in $6,650 plus an additional $1,000 if you're age 55 or older. And those contributions to an HSA or rollover, they cannot exceed the maximum amount in a year.
Let's say you put the $3,350 in there when you were single, but then had a family. Can you make the other deduction, or should you wait until you can do the max?
Let's say you're going to form a family in the course of that year. Then you're going to get married. You go ahead and wait to do the family contribution. But the rollover, though, you're turning money from what was an account with the IRA in the future that you're going to pay income taxes when you took a withdrawal. Now it's in an HSA. Now that account can grow. It's tax-free if the funds are used for qualified health expenses.
And you make the point that some people might roll it over and then be tempted to use it right away. Well, if you need it, why not use it right away?
Yeah, it would be tempting, but think of it as an IRA. The true benefit of the IRA was it was money that was going to be invested for the long haul. Do the same, put the money in the HSA, even if you're making a contribution or the rollover from the IRA, let it grow. That tax-free growth is incredible. It's going to be a big help down the road to be used for health-related expenses, and it's tax-free.
Fair enough. Casey Bones with Hengel Capital Management, and we're looking at 8:53. Scott Sloan is in today. And I got this referring back to Crime Stoppers. I was trying to find this when I was talking to Melinda Jordan. An email from Lisa Smith at Crime Stoppers about some misinformation that may have gone out over the air yesterday. I'd like me to clarify. We'll get to that just ahead. 700 WLW.